Hey guys, welcome to today's trade breakdown. Today is Wednesday, and actually, once again, really a clean expansion day. And I took one winner and one break-even trade, which you can see right there. So yeah, actually, really clean trading day today. We're in bit different conditions, so we were expanding with the 10 macro, not like yesterday. And yeah, let's basically go through it. So yeah, we are trading at all-time highs. Nevertheless, definitely yesterday we had a strong expansion day to the downside, and as well today we are definitely yeah, we were seeing some potential to the downside. Yeah, we are now trading once again up at basically all-time highs right there, but yeah, we are definitely not really interested to trade against the higher time frame. In that case, the higher time frame was actually bearish, as you can see right here on the hourly charts. Hourly chart, in that case, yeah, hourly chart was definitely bearish. Strong, aggressive candles to the downside. So we are trading up basically with Asia and London, and then we expanded lower with basically New York open kill zone, and therefore we expect AM to be actually a continuation to the downside, not really a retracement as we saw it, for example, the days before. So yesterday basically, and what I was looking at is definitely Asia lows, external sales liquidity. Unfortunately, we did not get that. So once again, we kind of failed to trade or to sweep external sales liquidity. That is, if we are trading at all-time highs, sometimes the case. So I was also not really aware of the yeah, huge wick we had right there on the 5 and on the 50-minute chart as well. So definitely something I should have yeah, be aware of. So right here we are therefore also kind of also still in a market maker buy model. So we have sell side and buy side, and because we are all-time highs, we can expect that basically right here is only a aggressive retracement. Still, I would have also liked that we could have seen a potential to completely trade lower and actually sweep this really extra liquidity right there. Because to me, the market maker buy model here right there is kind of completed. So you could say that, yeah, we need to sweep all-time highs for that. But yeah, it's just not really necessary for us to trade even lower. So I think the higher time frame is not really saying much in that case. That's why I love to take a look at regular trading hours. You know that's my approach. But what we have right here is a Newton range gap of 161 handles. So trading conditions. But as you know, once we basically disregard the quadrant levels, we want to see that we close in today's Newton range gap, especially because that is basically also aligned with my bearish bias regarding the hourly chart. So actually quite, yeah, really clean trade today. Unfortunately, we did not take out the high right here. This would have been actually perfect if AM basically, so 930 just wicked higher and basically sweeps the yeah, high right there. But as you see right here, we are trading lower. We already completely displaced through the upper quadrant level. And yeah, obviously we can trade back to CN from there and continue our trend. But as you see right there, if you look closely, we also close below CE. And that's already our indication that we are going to close in today's open range gap, that we are going to see yeah, a continuation to the downside. In that case, if we take a look on regular trading hours, I think the market maker buy model right here being in play is even more obvious. It's like really V-shaped, so that's perfect. Therefore, because we're also still trading at all-time highs, I think it's kind of now obvious that we're not going to expand even lower after AM. But still, for our trade right there, we don't need always the external sales liquidity, so we don't need that. We can just basically take a piece of the pie, and that's enough in that case. So back to our trades I took today. Oh, that was wrong. So right there, let's drop to the 1 minute chart. So what I want to see if we are basically, if AM is not going to retrace, but if I expect that basically AM is going to expand lower, I want to see a short-term run on stops. What I mean by that is that we basically with the opening we need to see manipulation, and as you can see right here, we are already trading lower, and we sweep new open kill zone sets liquidity. So that's not really perfect. There's not really a chance that we can enter in here. Why? Because we did no damage to the buy side. We did not manipulate higher. As I mentioned before, I would have liked that 930 wicks even higher, and basically also sweeps regular trading hours by liquidity I showed you before. But therefore we have to stay patient. We cannot short anything in here. We are definitely also not in the ATM model, so we wait for a tail macro, which starts basically with 9:45. As you know, we can enter 3 minutes before, and that's also where our SMT right here got created. That's perfect. That's a short-term non-stops manipulation to the upside. We disrespect the bearish fair gap right here. That's in that case perfect. Why? Because that's basically manipulation. Once again, SMT being created, that's our smart money reversal. We don't want to see that we take out the swing high right there. So I entered short right there, anticipating that the bullish fair gap right here is going to fail, and basically gets utilized as a inversion fair gap, and that's what we can see perfectly right here. So we close below it, the new candle right here opens up, trades perfectly to see, and from then sold off. And that's perfect. We sweep Asia liquidity. I was patient. Why? Because I was looking at, once again, regular trading hours, because we did not have any reasonable targets to look for on electronic trading hours, despite basically the Asia lows or the quadrants of the 5-minute wick. So I took my first partial right here. Basically, I just wanted to see. So right there, we did not really trade back perfectly to the lower quadrant level, and I knew that we are going to trade once more lower because the 5-minute candle was still not closed. So was really patient, just squeeze a bit more out of it, but basically trying to take my first partial at the lower quadrant, and then I was aiming for my second partial right here for the low of our new opening range gap. That's perfect. That's what I want to see, because basically with closing in today's new open range gap, we can expect support coming into the market, that we're going to see basically a reversal from there. That's what happened today. Why? Because we are also in a strong market maker buy model on regular trading hours, so that's kind of likely to happen. Also because we swapped sales liquidity right here on regular trading hours. Still, I would have liked, as I showed you before, and I also mentioned before, I would have liked that we reach Asia lows, just because it's external sales liquidity. In that case, because we are also in really strong low resistance conditions, that would have been perfect. In that case, I definitely missed out on a lot by not being aware of the wick right there. But I think it's really hard to tell. So you cannot really know that we are going to instantly reverse by only basically reaching the upper quadrant level of the wick slightly, not even CE, just the upper quadrant level, and from there instantly reversed higher. No chance to mitigate in here, so not even re-sweeping the low right there. So that's not really easy. Also right there, we are definitely way before 10 a.m. So to me, that's, I don't know, it's not really perfect. That's even, or therefore it's even more important that we take partials, basically, because we cannot always expect that we are going to reach external liquidity, and that's why partials are so important, and that's why we can still profit from some trades. And I mean, it's a still perfect trade. So let's call it 1.7 RR. Perfect, and got stopped right there, break even. Bit unfortunate, because it was slightly at the high of the retracement right there. Could have mitigated definitely. Basically trading must stop even lower. But we saw once again SMT still within the tail macro, and I entered short once again right there, because to me that's, as I now mentioned before, unfinished business. I would like to see that we re-sweep the low right there and sweep external excess liquidity. I thought that we are going to expand a bit more aggressively to the downside. As I showed you before, regular trading hours was definitely not really as drastic bearish. So we were closing in today's open range gap, therefore we can expect support coming into the market, and also that we are in a market maker buy model. So that definitely was today not really the case for expansion beyond basically external liquidity. But still, I think the entry right there is not perfect. The SMT is really important. If we do not have an SMT in there, being a player would not enter, because we have no in that case no damage to the buy side. So the SMT right there is really important. enter right there short after we traded below basically aggressively of the C level of the 5-minute order block. You can see right there. And actually close then my position. I will show you in a second. Just want to see where we traded to with the wick. Oh, that's interesting. And basically close my position right there, break even. So enter right there, close right there, break even. Why? Because I just did not like how we delivered. So way too many wicks in here, way too much manipulation, way too much high resistance. If you're going to trade lower, we have to do it quick. We have to see candles like this. Then we are in low resistance. Big, strong down close candles. That's not what we have right there. That's only a shallow retracement back to the, in that case, what is it? The 5-minute wick of the order block right there. Trade perfectly to CE, and from there on we trade higher. So definitely not in bearish conditions, and that's in that case, I'm a bit proud of that. That's how I want to manage positions. If I just don't like what I'm seeing, I don't have to hold through it. Why should I basically let this trade come all the way back to my stop? I don't even like the price action right there. I mean, you cannot really know how it's going to play out. But once we basically see there are warning signs, then we can definitely close the position. And I think that's in that case a perfectly avoided loss. Really important, perfectly done. And yeah, from there we trade higher. Now basically fulfilling the market maker buy model on regular trading hours, back at all-time highs almost. Not really, but London already traded a lot higher in that case. Let's see if we have also SMT right there. Yeah, we have. So that's that's really clean to see. So SMT right there at the small highs right there as well. And from then we started our market maker sell model. So perfect trade. Also today, shorted with 3 contracts, not 2, because I was just super confident in the trade. And that's what I want to trade as well. So conditions where I'm super confident in a draw, that's perfect. We just have to be really patient for such high quality days. As we had basically yesterday and today as well. So really good days. And yeah, I hope you enjoyed it. I hope you learned something new, and see you soon.